Please welcome to the stage our next session's moderator, Paige Smith, consumer finance reporter for Bloomberg News, joined by distinguished guest Rohit Chopra, third director of the Consumer Financial Protection Bureau and former FTC commissioner.
Hi, folks. Thank you for coming this afternoon. Thank you for coming to New York to chat today. Well, we will kick things off here at Stablecon. We've got a lot of things to sort of discuss today, but I think stablecoins are top of mind for a lot of folks in the audience and the media, of course, as well, but for regulators too. So I think let's just first start with a question on just kind of the utility of stablecoins, and stablecoin technology as well. I mean, I think that during your time as director, you spoke about, it's really well known that stablecoins have a heck of a lot of utility in the cryptocurrency context, but when it comes to payments and other uses and potential for the technology, I'd love to hear if that's still top of mind for you. And
yeah, well, thanks for being here too. I would say this, I think it's important for us to start having a lot more discussion about stablecoin in the context that's not related to crypto. So when I mean the trading of cryptocurrencies, but actual stablecoin is a huge, huge issue for future of payments, but also, frankly, what is the future of a bank and a bank charter? Because essentially what we see maybe happening is the potential for trillions of dollars of bank deposits to move over to stablecoin issuance that has a huge effect on the cost of credit, the dollar as the reserve currency, so many consumer protection issues and more. And I think really that's where the action is.
Can you kind of step back for a minute there? And I mean, stablecoins are also global, of course. So what does that mean for the global economy? What sort of implications as this technology is adopted more widely do we see?
I think that's not going to be driven on the consumer side. That's going to be driven on the cross-border payments piece of things. Look, in the US, we have a pretty antiquated system of moving money around. We have a lot of incumbents, particularly Visa and MasterCard, who want to see the system largely stay the same. You have interchange as a major part of the costs and expenses of retailers throughout the economy. So it's hard to say. I'm pretty curious as to if you do see trillions of dollars go into stablecoin issuance, where will that take the place of? Will it take the place of a lot of trade finance overseas? Will it come from bank deposits? Will it come from foreign investors? All of that, I think, is going to have big implications for the dollar and big implications for the US too.
I mean, you had sort of an unprecedented view into a lot of this technology as one of our country's foremost financial regulators. What were you seeing during your time at the CFPB, and kind of what should we be thinking about?
Yeah, I mean, we were very fixated on the privacy and surveillance part as well as the fraud and error part. So if you want stablecoins to be part of the whole payment mix for consumers, we really worried to what extent are people going to have the same experience if their account is hacked, if there's an erroneous transaction. And we were wondering how some of this would play out, because we heard some mixed point of view about whether certain operators felt that they had to comply with that. Another very big piece for us was, to what extent would a big incumbent, a big tech company, a big retailer, very much become a major stablecoin operator? We saw a little bit of this when we probed into the big payment apps, asked what their plans were, and I became pretty convinced that it is not a great idea to have big tech giants really be a major issuer of stablecoins. We went through this debate in 2019 with Facebook's Libra. It was definitely different than a dollar stablecoin, but it raised so many issues on privacy, surveillance, and competition that I think we got even more worried about it.
So kind of on the topic of regulation, there is a bill that's being kicked around Congress at the moment, particularly related to stablecoins. What opportunities does it present? What questions do you have on it? What are your thoughts on the Genius Act?
I'm wondering how are we going to deal with runs. So I sort of see the stablecoin debate right now in terms of Congress. They don't talk about it this way. They talk about it in terms of crypto. I see it as, do we want tokenized bank deposits or do we want tokenized money market funds? Because what they are saying in the debates is we can back this with Treasury securities. And in fact, Secretary Bessent is saying he wants stablecoins as a demand producer for Treasury securities. So this to me is complicated because if you are not using tokenized bank deposits or if stablecoins are not backed by bank deposits, all of the funds that are used to initiate bank lending for consumers, for agriculture, for local businesses, to what extent does that stop happening? So I would personally prefer if more stablecoins were backed by bank liabilities or if we were tokenizing bank deposits. I think that would be a little bit more, it would help protect on runs. We have a system where banks can go to the discount window when there is times of stress. We have a system for which we take deposits, transform that into loans. So I think that's one big issue, but to me an even bigger issue is who is going to get to be an issuer. Right now, there is thoughts that anyone can essentially be an issuer, including very big retailers, very big tech companies. Ideally, you would not have a winner-take-all system here or a system where an issuer is able to use their power as an issuer of the currency to advantage other parts of their business. We have long separated payments, banking from commerce, and I think there's a lot of advantages of doing that.
So kind of on that, to kind of hit on both your experience at the FTC and the CFPB, I mean, is it best then for the country's biggest banks, for example, to be issuers? I mean, there's already a disparity in our banking system, massive disparities between the biggest of the big and sort of the smaller folks that maybe, the vast majority, maybe not the vast majority, but a heck of a lot of Americans rely on for basic banking systems. Are those the best folks to be?
Well, I don't know. I would love there to be a lot of small issuers. But I still think that if it is all backed, if it is like money market funds, and money market funds really are a basket of commercial paper, of Treasury securities, we now essentially have to constantly rescue money market funds. The Federal Reserve has had to step in to stabilize money market funds so many times. So, this raises the question, what if there is instability and what if there is a run? And I think you have reported on this page the failure at Synapse. We have had situations where people cannot get their money. We've had prepaid card companies have serious failures. And when people cannot get their money, it is a devastating harm to them. And I think we all want to figure out all the ways to avoid that.
What about regulation more broadly in the financial sector? I mean, you had a sort of great amount of visibility into the biggest banks, but also the payment companies and sort of across the financial ecosystem. And under the current administration, a number of those regulators have certainly been curtailed and pulled back, including the CFPB. What does that mean for the global financial system? What does that mean for new technologies like stablecoins? Is it just the Wild West out there? What are we dealing with?
Yeah, I think, obviously I do think the ending enforcement, ending oversight is probably not wise, to put it lightly. I think the idea that there are established companies in industries within financial services that want to be seen as credible, want to be seen as following the law, and if there are lots of actors that are scamming and engaging in fraud, that is bad for that industry. So I do think that that's going to be a problem. I also think, Paige, more broadly, I worry that the largest banks, if they are able to call the shots on a lot of these regulatory issues, they will smother competitors and innovators that can actually do some good. We have seen this constantly in payments innovation, where many banks are holding on to a system where they can assess a lot of tolls and rents on the system and are part of stopping, I think, some things that have to change. You may know that the CFPB's open banking rules, which are supposed to provide consumers a lot more ability to switch, to permission their financial information, to multi-home, to have more interoperability, there is a sense that the banks are getting their way, the largest banks, to put the kibosh on all of it. And I think that is a huge harm for the entire ecosystem and for the American consumer.
So we've reported that the Trump administration is, now it's now public that they're going to move forward to rescind Section 1033. But I guess we're curious to learn how does the ecosystem evolve from here? I mean, clearly the market is moving forward, and those banks that also do oppose some of these rules have also embraced components of open banking themselves. I guess I'd be curious, how does the industry move forward from your perspective? Is there a need for additional regulation? Can the industry self-regulate from your perspective? What's needed moving forward?
Well, I mean, there's no way. We often think of self-regulation as in self-policing. A lot of these are coordination problems. If nobody is allowing their consumers to share data, if one player starts blocking it, you really want a situation like when the FCC put in an order to say that consumers, when they switch their cell phone provider, they can take their number with them. It allows to reduce a lot of friction, allow people to switch. I think for people interested in stablecoins, we always thought about open banking and open payments as part of different types of payment ecosystems. But I think it's negative, and I think the current environment is going to lead to more accusations of industries scamming people, defrauding people, and that's not going to create a lot of confidence.
During your tenure, you brought a heck of a number of enforcement actions against players, from fintechs to payments companies to banks themselves. A number of those enforcement actions have now been rolled back under the current administration. Where do you see, or how do you see the CFPB functioning under the Trump administration?
I have no clue. Honestly, I have no idea what it's doing. I don't think it's doing any work. I think it's doing a lot of worship of the regulated entities rather than protecting the public. But I think really for payments, if you look at payments innovation in almost every jurisdiction, India, China, developed nations, it has all required some degree of government involvement in making sure that the rules reflect the ability for people to use different types of payment rails and different types of identity verification. So I'm not sure some sort of fantasy of no regulation will actually help change the status quo at all.
Gotcha. Just to go back to the idea of banks sort of entering the stablecoin space, if you will, there's been some reporting out there from a number of outlets that some of the biggest banks are talking about coming together to sort of issue a stablecoin of some kind. What would that look like from your perspective? Would that be sort of an ideal outcome? What are your thoughts?
I don't know. I mean, I think they've all looked through different ways of doing it. They've all thought about how they could coordinate with each other, how that would allow for more instantaneous settlement. My sense is that many are quite bureaucratic and will be slow to market if they do that. But I think the bigger question, Paige, is if you have most stablecoins backed by bank deposits, you will be able to enjoy the benefits of Federal Reserve liquidity in the time of an emergency. You will still be able to see those funds transform into bank lending, which America needs a lot of. And you will not necessarily have some of the conflicts of interest, let's say, if the stablecoin is issued by a tech giant or a retail giant. So I think that's really the question about what are we going to back this with. There is also some inconsistencies in the administration's position on this. They want to attract more funds to back stablecoins in treasury issuance. If that is coming from foreign investors, that will put pressure on the trade deficit. This is just how global capital will work. So I don't really get what they're trying to do completely. I hear that maybe they want stablecoins to be part of lowering the 10-year treasury note. The idea of backing stablecoins with a long-dated treasury note just seems like a recipe for a panic or a run.
What about the payments ecosystem a little bit more broadly? I know that you've been pretty outspoken against the what you've labeled as a duopoly of Visa and MasterCard in the past. How do you see the system evolving over time as there are new entrants, and the Capital One Discover deal recently went through, sort of theoretically giving Capital One a bit more ammo, I suppose, with the Discover network. How do you see those networks evolving over time?
I have no confidence at all that Capital One Discover will create any meaningful price competition for Visa and MasterCard. That's one. Second, I don't think that unless we have some way to allow consumers to do pay by bank or to have the ability to use different rails where merchants are able to create incentives for that, we will continue to have most of the consumer transactions go through Visa and MasterCard. So I don't see a way to solve it. I was involved. The Justice Department has, I believe there was hearings today on it, filed a monopolization lawsuit against Visa. When I was at the FTC, we had investigated MasterCard, and that led to an enforcement action. So I really do think we need to do much more to inject many more options and a lot lower costs in the system.
I'm curious as well from your perspective, we're in this time where frankly that fintech funding is significantly down, and that means you're saying that more options are needed and theoretically more competitors for these folks, but if there aren't as many new entrants into the space, or the folks that are trying to challenge these larger participants are sort of stuck from a funding perspective, like how do you see that evolving? We're seeing like Chime file for an IPO, for example. These folks that were sort of once upstarts are now becoming like major, very big players themselves. How do you see kind of the fintech landscape evolving, and from a regulatory perspective?
Yeah.
How do you see
that
playing
my
out?
sense is that the potential destruction of open banking rules is a negative for fintech formation and competition. The interest rate environment is not totally hospitable right now for a lot of different types of firm formation. I have continued to wonder the extent to which banks will be major acquirers in the future of fintechs and other startups. There's obviously pros and a lot of cons of that. We would like, obviously, for more of the largest banks to face some more competition to it, but I think some of that is going to be driven by the broader macro economy.
Gotcha. And where do you see global players kind of stepping into the U.S. from a payments perspective?
Yeah, I don't really know. I mean, I think we already have the likelihood, I don't know if we can predict it, but I would imagine there will be more stable coins pegged to fiat currencies that are issued outside of the United States. We have offshore dollar issuance, euro dollars, whatever you want to label it, and there's lots of it out there. I don't really know the extent to which, if there are runs or financial instability in those markets, the extent to which it infects the US. I think right now the Federal Reserve functionally backstops all sorts of offshore dollar issuance. TBD on how it will work here, but I am pretty anti-bailout, and I do think that we have ways in which we can make sure that depositors and consumers can get their money at any time, and I do not want to see systems that require bailouts for that to happen. And I fear that if a lot of non-banks are issuing stablecoins without ways to manage that type of liquidity risk, we will see runs.
What about the tone in Washington? Things have certainly shifted under the current administration, especially as it comes to reception or at least entertainment of discussions with fintech, crypto, technology folks kind of across the board. What are your thoughts on this changed tone? Are you welcoming of it? Are you?
Yeah, I mean, I would divide this up. I think one should think about payments, fintech lending, crypto, all very differently. I think, look, other people would know better. I think a lot of people in the crypto community are anxious about what they see in terms of the president's issuance of Trump coin. There's lots of anxiety. On the other hand, there is definitely a change in the regulatory tone. But on the fintech side, I mean, I consider it pretty decidedly negative for a lot in the fintech space, especially because the ways in which banks and others can throw up hurdles, a lot of that is going to go unchecked, and I think that that's not good.
So you're saying that it is better if there are conversations between fintechs and regulators to continue that dialogue?
I don't know. I don't know even who they would talk to. I mean, I don't know really who's running these agencies. So you'd have to ask them. My sense is that for people who are doing a lot to take advantage of more open banking and open payments using consumer permission data, it is absolutely not a good situation what they are seeing right now.
What are you hearing from inside the CFPB these days? Who is sticking around? Is anyone sticking around? I mean, you know, I used to troll the consumer database, consumer complete database for story ideas. I mean, is that data being preserved? Is there?
I have no idea. I mean, my sense is that most of the CFPB's work is actually in mortgage.
Yeah.
It's
which
by
is
far the biggest market. Much of the architecture of the mortgage system in the US is based on the Fannie and Freddie, as well as a lot of the CFPB's post-Dodd-Frank rules, qualified mortgage rule, others. So I'm not really sure. It seems that nothing is going on in terms of oversight of the non-bank mortgage companies. So if that's the case, of which that is where the majority of the market is, it feels like that is a big disadvantage to some players over others. And I specifically worry, are those mortgage servicers who are supposed to be helping homeowners modify their payments, go through the issues of escrow recalculation, dealing with property insurance, all of those things, that has been a huge challenge over the years, and you do worry about some backsliding and potentially illegal foreclosures.
We only have a little bit of time left. What's next for you?
Oh, I don't know. I have been taking some time off since being fired, and one of the things that I feel has been an observation is that I think people in the financial services area realize we don't really live in a true free market. I mean, we actually have an agency that meets every month to set the price and supply of money. So we all understand that, and we also understand that payments and banking is really tied to what we as people want for our financial system. And I think right now that is up for grabs about what is the point of the financial system. My own view is that the financial system is supposed to support the real economy. It is supposed to allow households and businesses grow, invest, and access opportunities And even though, you know, Paige, I'm a critic of a lot of practices by large banks, but we need banks, and we need banks to lend, and we need people to have a safe place to put their money. And I think maybe that is starting to change in different ways, and we should really be on guard to make sure that the most vulnerable people in society are not the ones who are the most hurt.
Okay. Well, we have an audience of stablecoin watchers and folks who are interested in hearing any final words or final ideas you'd like to share.
Well, I think if I'm someone who really wants to challenge the existing architecture, at least in consumer and retail transactions, I really do think we need more rails. We need retailers, merchants, and others not necessarily dominating the system. I think even though many may want to ultimately license or sell technology to very big tech firms, I don't know if America and the world are best off if those big tech giants are controlling all of payments. And I think that we see in China, WeChat Pay, Alipay, we don't want to copy and paste that type of model. We really want to chart our own course on this, and you all will need to help think through that.
Well, thank you for speaking with us today.
I appreciate it.
Thanks, folks.